tax and trade leaders prepare for global tariff disruption. I'm joined today by two tax and trade experts from EY. Jerome Scholten is global trade leader. Hello, Jerome.
Hello, Robert.
And Jay Camillo is global operating model effectiveness leader. Hello, Jay.
Hello, Robert.
Thanks to both of you for being with me today. Let me start with you, Jerome. Tariffs are definitely disrupting the global supply chain landscape. How do you see tariff policies rippling into financial concerns such as indirect tax, transfer pricing, things like that?
Yeah, Robert, I would say that historically the tariffs weren't so much of a big issue, right? The duty rate on average was a few percent. So it was just part of doing business. As soon as tariffs jump to 10, 20% or higher, it's directly really hitting the bottom line. So what we now see is companies struggling with the question, okay, is this a long-term situation? How is it going to impact my financials? Do I need to do something to manage my customs duty bill? Are there options? What is the ultimate burden? What do I pass on to my potential customers, or what do I have to look back into my sourcing? What can I manage myself? And that's all a financial play, essentially.
A lot concern there. Jay, could you speak to maybe the issue of relationships, especially when it comes to things like transfer pricing and stuff like that?
Yeah, sure. So, Bob, much of global trade is between related parties. So, a key thing for companies to keep in mind is they may have X amount of importations into the United States that are subject to new duties. Some of those might be coming from third parties, and there'll be one set of negotiations that can be had with third parties, and probably up to half or more of all their imports are going to be coming from related parties. Related party valuation for importation and corporate income tax purposes has standards that have evolved over the decades. They are similar, there are overlaps, but there are some fine distinctions between corporate income tax, which we refer to as transfer pricing valuation of imported goods, versus customs issues that pertain to third party importation. So analysts have to be very careful to, first of all, really understand and trace through the supply chain. Where are they getting everything from? Make sure you have a great footprint and a great catalog of all of your importations.
With those considerations in mind, Jay, what impact do you see all this having on sourcing strategies in the months and years to come? What form might those take?
Clearly, it's going to depend on whether you perceive this as a short-term, medium-term, or a very long-term phenomenon. To the degree it is long-term, companies are going to really have to think about where they are going to source products. And in that discussion, there are always matters of concern that relate to costs of sourcing. How much does it cost to source the product? The risk of where the product's being sourced. Is it a risky location for any number of reasons? And lastly, the service levels, how quickly you can get the parts to you. So those considerations will have to be reviewed. But in addition, of course, a main area of review will be these notions of onshoring, nearshoring, friendly shoring, China plus one, thinking about what is the long-term potential tariff cost of where you're sourcing your raw materials, your work in process, or your finished goods, because all of those will be subject to tariffs, and that'll have potentially dramatic impacts as to where you source your goods. I
Mhm.
anticipate there'll be a lot more diversity in terms of sourcing strategy, redundancies that'll be re-emphasized. They were already emphasized by the first round of tariffs and the first President Trump administration going back to 2018. So we've actually been looking at this now for at least 7 years
Yeah.
when we've started to encounter the tariffs and protectionism and sort of new national security slash industrial policy strategies of
Mhm.
governments around the world.
I imagine we could also see a wholesale renegotiation of existing supplier deals as well, could we not?
Absolutely. And that'll be, again, this consideration of when you're dealing with a third party vendor, you're having one set of discussions. When you're dealing with a related party supplier, you must comply with the transfer pricing regulations, which put limits on things that you can do. It's ultimately dependent on the functions, risks, and assets of the two parties,
Mhm.
and those will need to be re-examined over time. But other things can be looked at in that context as well. What does the price consist of? How much does it include and exclude in terms of intellectual property, in terms of rights, in terms of commissions and other things?
Yeah. Jerome, what kind of analytical tools might help here? I'm thinking of AI as one possibility. I'm wondering how companies can model their supply chains to get a clear view of their options, how to respond to various what-if scenarios. What's out there that could help?
Yeah, Bob, I think that's key, right? It starts with the data. And basically, we have a few very rich sources of data. We have either company data or we have external data. And let's take the US. The US has an ACE portal. That's a portal that stores all the import-export data.
Hmm.
You can extract that data. You can use tooling to basically normalize the data, start dashboarding it, and then basically model out all the different scenarios of the tariffs and retaliation, because you can also see all the export flows. And we use, well, companies use that data, and you can use a number of AI ML type techniques, Power BI dashboard techniques to basically visualize what the potential impact could be. And that's on the flows of goods. And maybe just one additional component where we see a lot of AI is you also have the product itself you're importing. So you import a product. Every product around the world needs a HS code, a tariff code. And you need to do the right one because these duties, some will apply across the board, some will only apply to certain products. So you want to be very precise on the correct tariff classification and the country of origin. And
Hmm.
both require quite some sophisticated calculations and assessments. And in the last couple of years, we see a very strong increase for using AI and other techniques to step away from manual activities only to technology-enabled services or technology all the way.
Yeah.
It,
Sounds like the technology is coming along at just the right time
yeah,
in terms of what's going on out there. Jay, it strikes me that this would require a pretty massive multidisciplinary approach on the part of companies. So, how can tax, trade, and supply chain professionals collaborate to address these challenges?
Yeah. So a lot of the first point of contact in a corporation when it has to do with tariffs and duties has historically been within the general counsel, regulatory area, or within the supply chain and logistics. But any movement of the supply chain, of the sources of the pricing, is ultimately going to come back around to the tax department because the tax department is very much concerned with income and deductions, and both of those are impacted whenever you change the price of a transacted good amongst related parties. So tax has a real special role to play in that tax can in some ways be a connective tissue, right? Tax has a lot of data already by virtue of the function they undertake. So what I see in terms of best practices is the task forces or the war rooms that are being set up by corporations definitely are going to have legal, they're definitely going to have supply chain, and then they're going to have tax, be it the indirect tax side that Ron's been talking about, duties and tariffs, or the income tax side that I primarily deal with. Within that circle, though, we also would always include legal, information technology, the talent function. So anytime transfer pricing or supply chains pivot and move based on exogenous factors like the tariffs we're seeing now, you do have a multidisciplinary response that you have to mount to make sure it's most efficient for the corporation
Hmm.
and for the corporation shareholders, and that it's fully compliant with all the rules and regulations that really touch on both the trade sector and the income tax sector.
So indeed, a huge undertaking. And of course, all of these changes that we're talking about so far, they're going to take a long time to implement. Sourcing strategies don't change overnight, for one thing. But Jerome, we're facing a problem right now. So how can
yeah,
companies pivot in the short term to mitigate the impact of immediate shocks?
yeah, Bob. I think we should go back one step to that data. We need to understand what's the actual impact, what's the financial result of these tariffs when we modeled it out, and then I would say there's more or less a path. Short term, what can I do, which we would almost call no regrets, right? Versus long term, moving into transformation, changing supply chains and the likes. The first part is where you say, I'm keeping my supply chain as it is today. Then I need to critically look at Jay and myself at the table or in the companies, right? Tax, transfer pricing, indirect tax saying, well, if I look at the prices I'm charging between entities, shouldn't I anticipate and take into account that at year end, I may end up in a loss in the US and I need to do downward adjustments of the prices. Should I do that already in advance to not overpay and have a risk of not getting the refund if I don't do that in a compliant way? Or should I look at the prices I'm charging and understand, is that a price that includes many elements and some of them which legitimately could be charged separately, but not suitable? Is that something to explore? So there's different kind of ways to look at your current pricing. And you see it in particular, Bob, in industries where the duties were 0% in the past, pharma, etc. They've never really in detail looked at this versus apparel where there were already high duties. They will always very critically look at the intercompany prices. So basically, some of that sector knowledge available in consumer and others will probably move to other industries that are now dealing with duties where they didn't do that before in the same way.
So much to consider, but I want to thank you both, Jerome Scholten and Jay Camillo of EY, to help us understand some of the considerations that companies have to be thinking about in order to deal with this incredible disruption in the trade and tax landscape today. Thank you very much for your time, both of you.
Thank you.
Thank you.